Nirmal Bang, ladies and gentlemen. I'm Hira Datia. We have with us Mr. Suresh Goel, MD and CEO at National Highways Infra Trust, as well as Mr. Matthew George, CFO at NHIT, joining in. Welcome to the show, gentlemen. And firstly, congratulations with regards to the InvITs. Firstly, my first question coming to you is, overall, if you could give us details in terms of the fundraise.
Good morning to you, and thank you for giving the opportunity to both of us to speak with you and your viewers. So the fundraise is being done to facilitate acquisition of 3 toll roads from NHAI. And I'd like to give a bit of a context to all of you that the National Highway Infrastructure Trust, or NHAI InvIT as we call it, was set up to facilitate national monetization pipeline, which was announced by the government a couple of years ago. As you know, that the national monetization pipeline has an ambitious target of 6 lakh crore, and the funds to be raised are to be used for development of further infrastructure. Within that, the highways or the national highways that we have in the country have the highest share of capital from the domestic and the international into the Indian infrastructure. So we are kind of at the bridge at this point in time. The first round was completed last year, and we were able to raise about 8,011 crores, a combination of debt and equity. And we are in the midst of fundraising for round 2, under which we are acquiring 3 roads. We have recently concluded unit issuances of 1,430 crores, in fact, which get listed today. And the balance 1,500 crores is being issued through the NCDs, about which we are talking with you, and the issue will open on the 17th.
Right. So in terms of the NCDs, if you could just help me understand, what is the coupon rate, the tenure, effective yield, as well as in terms of the ratings on the same.
Yeah. So thank you. To start with, what is proposed is the base issue of 750 crores and the green shoe option of 750 crores. Now, the face value of each of this instrument is going to be 1,000, which would be broken up into 3 strips containing 300, 300, and 400. So when an investor buys into it, he is free to trade each of it separately. So let's say he buys one NCD. When he's buying one NCD, he has to buy the whole thing together. But at a later date, it's his option whether he wants to sell the shorter, shorter portions, or hold on to it. Now, just to take a step back, how these instruments are structured is the first 300 has a maturity of 13 years.
Okay.
And the redemption of the 13 years starts from the 8th year onwards. So 8th year, 9th year, 10th, 11th, 12th, 13th, each of it, there will be a rupee 50 payout. So by the 13th year, the full the strip 1 is finished. The second strip is having a maturity of 18 years, and the redemption starts from the 13th year. And the third strip has an end maturity of 25 years. And the redemption starts from the 18th year. So now, once an investor buys into it, he is free to trade each strip as he feels like. Now, let's look at it this way. An investor buying into it now, the coupon rate is going to be 7.9 with semi-annual payments, which effectively works out to 8.05. An investor buying into it right now, if you look at it, it's an attractive price because it's as good as anything in the market for a AAA. Now, we have 2 ratings of this AAA. One is from CARE and the other is from India Ratings. So an investor buying into it 8.05 today, the pricing is really good compared to the markets, compared to what is even an FD or anything he gets in a nationalized bank. And knowing that India is a growing economy, interest rate is going to come down, bound to come down over a period of time. So he's locking into 8.05. So let's say I, as a retail investor, supposing I want to get into it, I know that over a period of time, interest rates are going to come down. So let's say I buy a long-term, I go into the market, and in case there are people willing to sell the long duration strips, I buy that from the market. I hold on to it. But the advantage of this whole NCD issuance is that once I get into it and I suddenly have a requirement, I can always go and trade in the market. Okay, and unlike a fixed deposit, there won't be prepayment penalties or anything. It will be linked to the market, so the rates you're going to get is good. You can trade it at any point of time. The coupons today is good. Going forward, it will become even more attractive as the interest rates start declining. You know, India being a growing economy.
Right. So, will this be one of the first asset monetizations by a state-owned enterprise through InvITs?
So no, the monetization started last year. Right? So like I mentioned, so we already had 5 roads that InvIT, and we raised funds against that. Into the same portfolio of 5, we are adding three new roads now.
Okay.
That's called round 2. So when the investors are coming into the NCDs, they are getting exposure to the 8-road portfolio. So it's not just funding this first 3 assets, because all of them are sitting under the same trust, and the NCDs are being issued by the trust. So the cash flows of round 1 and round 2 assets, which is 5 plus 3 assets, are available to the NCD holders, you know, for the coupon as well as the redemptions that will take place.
Right. So the current portfolio as well as the one which opened up last year, in totality, we are saying there'll be totally 8 road projects, right?
That's right.
Yes, sir.
Yes.
That's right.
So for these 8 road projects, what is the approximate tolling revenue generation on a yearly basis?
Sure, that's a good question. So the total roads, the total length of the roads, and just to give a flavor to all of you, these are 4-lane toll roads spread across the country in the states which have shown higher than national average GDP growth, right? So which is very, very important for us to see where those roads are located. The total aggregate length of these roads is circa 600 kilometers, and the revenue is north of 800 kilometers in the current financial year, right? Up to in FY23. So if you notice, the revenue per total length of the roads is a very, very attractive proposition. And these roads have been in operation for a very long time because they are located in major corridors and on GQ and east-west corridors. So there is a past history, there are set traffic patterns, they're all located in near large industrial or manufacturing locations, major cities, etc. So we expect that the long-term traffic growth in these countries is going to follow the national GDP growth that we are likely to witness in this country.
Okay. But in terms of numbers, do we have a price? Because to what I understand, at least for the first initial 5 road projects that we were looking at, it was around 450 to around 500 odd crores for FY21 in terms of the toll collection.
So this year the toll collection from those roads is between 500 to 600 crores, because we launched this InvIT last year. So that's a 1-year growth that the numbers that you quoted on that we are going to see. And the growth is primarily coming because of 2 factors. We are seeing traffic growth on the roads, like I mentioned, has got a strong correlation to the GDP. And the second is the tariff growth. And the tariff grows linked to the WPI. So we are in a high inflationary environment at this point in time. So a large part of that inflationary increase is actually passed on through the tariff, which kind of escalates into the revenue and the cash flow of the road. On top of it, then we are adding 3 new roads, right, which will get added this month. Those 3 roads contribute more than 300 crores, are expected to contribute more than 300 crores in revenue in this year. So 550 for the first 5 roads, 300 plus for the 3 new roads. So that's why I said north of 800 crores is the likely revenue for FY23.
Right. And overall, what's the enterprise value of these 3 road assets currently?
So when we issued the InvIT last year, the enterprise value for the first 5 roads was 8,011 crores. Now there's been increase in that because the NAV has grown from 101 rupees to 107 rupees, as of last month. And as well as we have done 3 distributions, right? So to an extent, very difficult to say how to add back the distributions, but let's suffice to say 8,000 crores was the enterprise value last year for the initial portfolio. This portfolio has an enterprise value of 3,800 crores. so which will get added to that. So our portfolio, our enterprise value for the combined portfolio is 12,000 crores plus.
Okay. And overall, from an investment perspective, from a retailer point of view, is there a cap to the investment?
Yeah.
So on the NCDs, so before we go to the NCDs, just the unit issue has already been completed, right? So have already raised 1,430 crores of units from very marquee institutional investors, existing investors, as well as very pleasingly some new investors. So that issuance has been completed, and the units actually get to start to trade today. We are now in the market to raise 1,500 crores of bonds.
Correct.
And as Matthew said, those 1,500 crores bonds have been put out as a long-dated bonds, and we have put 4 buckets into that. Maybe Matthew can just can share how the buckets would
so the bucketing right now is 25% for retail, 25 HNI, 25 corporates, and 25 QIBs. But needless to say, like I mentioned earlier, the base issue size is 750, and the green shoe option is 750. So what happens is now, let's say a retail investor, if he's deciding to come in 5-6 days or something, and by the time we have a full subscription, we may have to do an early closure. Okay, just to take a step back, see, the issue is proposed to be opened on 17th, and as per the prospectus, the closing date is November 7th. Now, however, as per NCS regulations, the moment we get the full issue, let's say 750 or 1,500, we are free to give a notification close earlier. Now, considering that there's substantial interest from the institutional segments also, in all likelihood, it would be recommended that retail investors subscribe as early as possible. Otherwise, they may be left out, because once we get the full once we get the full buy-in, most likely, rather than not, we would have to do an early closure.
Got it.
Now, so let us say we get retail investors 25%. See, first priority is always to the retail investors. So once we get 25%, but then if it is oversubscribed, we just close it. If it is less than that, also we may have to close it, but that's a call we'll leave it to our board to take.
Got it. And then very lastly, my last question coming to you is in terms of utilization of the funds. Is it going to be only with regards to development of the road projects or, repair work, etc., or there is any infusion of debt happening into the project SPVs or repayment of bridge loan facilities?
Yes. Okay. So good. I think you've covered a lot of things in one question, but that's good. Okay. Now, see, right now we have taken we have got a sanction of a bridge loan from State Bank of India. Okay. And just to take a step back, see, when we acquired the first 5 projects, we had taken a loan of 2,000 crores. Out of 2,000 crores, 520 was for improvement of the initial condition of the roads, for improving the toll plazas, the equipment, all that. Similarly, in this one, 1,500 is the bond issuances which you're taking, and I'll just come to that a bit later. But we have also got a sanction of 857 crores from Bank of Maharashtra at 7.25. What we propose is that would be used for the initial improvement work. This 1,500, this initial improvement work of the 3 new assets. Okay. Now this 1,500 which we get, we would be giving it as a loan, 1,500 of debt plus the unit money we have got. We take the whole money, we will infuse it into the SPV as a loan. So the SPV has loans from the first round, loans from the second round. The SPV will start making payments of principal, interest, and dividend into the trust. At the trust level, these cash flows are escrowed, paid to the lenders first, and the surplus available after that it goes to the unit holders. Now, just one thing which I'd like to put in perspective is, we have a lot of marquee investors who have put it, and just Suresh, if you could just get into that and explain that a bit, it would be good.
So I think I'll pick up where Matthew left, is that the money being raised from equity and the debt is being used to pay the concession fees to NHAI. I think that's a headline, right? And the initial improvement works, the money for that will be taken from the banks next year. The roads themselves are operational, and there is no major work required to be completed on that. There is no development risk as such on these roads at all. They have been in operations. They have been having tolling. The traffic is plying on them as we speak. With regard to just the waterfall of the cash flows, the toll that will come from the roads will be first used to pay operation and maintenance cost. Second, we used to pay to the bondholders and the debt providers. So because the debt is coming as one block, the previous year rounds debt as well as the bondholders debt, right? So that will be used first. Any surplus thereafter would go to the unit holders. And those unit holders, realizing this is the waterfall, still have given us capital, and these are all very sophisticated unit holders who have come in round one as well as round two. So in a way, they are standing behind the unit holders in the cash waterfall. So that is very, very important for the interested bondholders to be able to see where they sit in the overall cash waterfall when it comes to analyzing risks that they would have looking at investing into these NCDs. Does that adequately answer your question?
Absolutely. Absolutely. I think very well put up as well. Thank you, Mr. George. Thank you, Mr. Goel, for giving us these detailed insights as well, because really relevant from an investor perspective for them to come in as a retail investor, because these kind of assets are absolutely new for the retail market, right? For them to understand how they function is absolutely crucial as well. So thank you so much for joining us on the show again. Congratulations and good luck on the entire plan.
Thank you.
Thank you so
And
much.
thank you for having us on the show. Thank you so much.
Thank you.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.